Here for your weekly mortgage tip. Are you aware how important monthly debt is when impacting you in your ability to purchase a home and what you'd qualify for with regards to loan amount? I was working with a borrower this week who was sadly disappointed. He's got a great income, carries some debt, and was really surprised that he wouldn't be approved for a higher loan amount and purchase price for his house. I'd like to show you some numbers of why that is, and it has to do with DTI, debt to income. Different loan programs have different thresholds for DTI amounts. This person was a first-time home buyer. Many states allow up to 50% DTI, which is pretty generous. So I'm going to use that as an example. These aren't his specific numbers, but it's within the ballpark for you to see. He makes $100,000 a year gross income. And so if I look at $100,000 and I divide that by 12, the monthly income is $8,333. Let me turn this. He also, with that debt to income threshold, the 833, 50% of that is 4,167. Well, that would be the approvable amount for all of his debt along with a housing payment. Now, the housing payment I described, that's more than just the loan amount, which is principal and interest, but you also have to include taxes, homeowners insurance, PMI, private mortgage insurance, if they're not putting down 20%, maybe even an HOA. So in his case, for that debt, he had a couple car payments. He had credit cards, student loans. That debt totaled $1,250 per month. And so what that means is his total housing payment, subtract that 50% DTI, $4,167, subtract the $1,250 in debt, he's left up with $2,917 as an approvable housing payment. And as I mentioned, housing payment includes more than the loan, the principal and interest. So working backwards at a 6.25% today, principal and interest, that's the loan, $2,299, taxes about $340. He's looking to purchase in Northern Virginia. Homeowners insurance at $96 a month, PMI 177. What can he be approved for carrying that debt? That amount is a $385,000 home and $373,000 plus in loan amount. Not bad, right, for our area, but what would those numbers look like if he didn't carry any debt? And this is where it makes a really big impact on why borrowers should pay down debt years ahead of purchasing a home. So back to that 50% income, again, without any debt, we don't have to subtract anything. So we can have a housing payment of $4,167, principal and interest of $3,255, taxes $481, PMI 251, homeowners insurance 136, the total housing payment of $4,123. He'd be approved for a $545,000 house. That's $160,000 more in purchasing power that he would have if he didn't have any debt. That's why it's so important to pay down your debt or get it low prior to purchasing a home. I know that's a lot of numbers, but I hope that helps on how much monthly debt impacts your ability to get approved for a home loan and a purchase price. I hope that helps.